exciting. Look at a Zentech, look at an MTAR. In fact, we had a great conversation with MTAR Tech just a few minutes ago. But the focus this morning on the Motilal Oswal conference that we are talking about, and we're exclusive partners there for the conference. You're watching this very special program. Motilal Oswal Financial Services is kicking off their 11th Ideation conference, and you can catch all of that action exclusively on NDTV Profit. The conference is focused on deciphering key trends in broader markets and unlocking the full potential of small and mid caps. The conference is held every quarter, and it's a great opportunity for investors to find hidden gems in this space. During the course of the conference, that is today and tomorrow, we will be speaking to an array of companies as well as the leadership of Motilal Oswal. And let's start off with Raamdeo Agrawal, who's joining in. Mr. Agrawal, great to chat with you. And what an interesting time to put the focus back on small and mid caps, when the market seems to have shaken off its blues a little bit, and small and mid caps, which have been in focus for valuations, are back in action.
Yeah. So good morning, everybody. So, this Ideation conference is the place where you can check the mood of the actual industries, what's happening in the various industries, because we'll get 30, 40, 50 companies, I think 60, 65 companies in 2 days. So it will come from all varieties of industries. So one, you can check over there what's happening there. And second, after this lull, what is this correction of 14-15% in the index? Now finally market is turning around, and so I think happy days are here again. Things are looking good. I think IPO market will open up, QIP market will open up, foreigners are buying. So I think some more activities now, and lot more fireworks will happen.
Okay, happy days are here again, especially for mid-cap and small cap. That's the question, because even a month ago, they were pretty much written off. Everyone said that, stick to the large caps, valuations are not making sense. Even after a downtick of nearly 10%, valuations are not making sense. When you say happy days are here again, which are the kind of companies that you're seeing with that upside still intact?
Yeah, too early to say the decided trend, but we can clearly see the financials, particularly led by banks. That seems to be the flavor of the season. And it had to happen, because what brings you for the first round up to say 25, 26,000 index? I think banks were ignored for whatever reason, credit slowdown, NPA cleanup and all those kind of things. Now everything seems to be falling in place for banks. Banks are being encouraged to give more credit. Credit flow is going to increase. Liquidity is good. Rate cuts are in offering. Balance sheets are very, very clean. I mean, except for one or two here and there, I think the credit cost is the lowest. The asset quality is the best in the history. Even for the PSU banks, I think the provisioning cover is like 80-90%. So I think this is a great time. If credit flow increases to 14-15%, I think you'll see very good return from the banking stocks, because not only there is going to be earnings growth, there is also, you can buy them at reasonable price. This is the only segment where everybody agrees that though it is very large segment of the market, this whole market, for whatever reason, high quality companies, high quality banks, very clean balance sheets, and available at sub 20p. So I think this is the start of the new vertical wave in the market, and here it is led by the banks.
Mr. Agrawal, good morning and thank you for speaking to us. You've always taught us that the bottom belongs to the person who stayed invested. Now, assuming that people stayed invested and are reaping the benefits right now, would you believe this is the return of the uptick, or is it difficult to say, because the street is divided between this being a scared cat bounce versus a sustainable up move?
Neeraj, who knows all these kind of things? I mean, you remain invested. Markets have, see, fundamentally, this time the market doesn't have a problem of earnings crisis.
Right.
Earnings remain stable. Okay, it grew a little slower than the trajectory growth rate. Say, we were expecting about 12 to 15% kind of growth. The growth turned out to be 5-6%. But per se, the earnings remain solid. It is a multiple which is a problem. So multiple was said 23, 24. That has come down to 20, 21. So it's a much more manageable. When earnings are not there, you don't know from where the earnings will come. But multiples, I think you can be a little lower, little higher. So my sense is bulk of the correction is done, and now have we hit the bottom and it cannot go down? I mean, a lot of geopolitical things are there. April 2 is becoming a big watch day for the global equity markets. What is going to come out from US, we don't know. So I think we are going to have a lot of these kind of big ticket events which are going to come. But on the whole, I think Indian markets, Indian corporates have shown resilience, and I would think that broadly next year's earnings are not going to be impacted by whatever comes on April 2nd. So and then even the US market guys, they are sitting on cash, a lot of cash, and they would like to diversify a little bit. So my sense is that we are on the whole, we are in a slightly warm environment for the time being.
And Mr. Agrawal, I'd love to know about what excites you in the conference as well. But just before that, one more macro question, sir. If the US investor wants to diversify, you've always said that don't bet against India. Yeah. I'm guessing that mantra still remains the same. But now, in 2025, we have a reinvigorated China, and we have a European economy which is putting capex to work. So are the options many for a global investor to invest currently?
Yeah, clearly global investor has more choices than what it was a year back. But then you're coming out of US. I mean, US is mother of all. I think it was almost 60% of the global markets. So at 62 trillion, you are 50-60% of the global markets. Of that, if you take the money off the table, because see, US is also rock solid in terms of corporate performance. It's only the uncertainty brought by these tariffs and whatever new policies. The multiples are looking higher out there. So there also it is a multiple correction in US so far, and hence money. So the global managers would definitely like to diversify, and let's see. I mean, what is their pick at this point? It is very difficult to figure out what they like, what they don't like. I think right now in the environment of a lot of instability and unpredictability, I think they will go for certainty and predictability, and India offers that. India offers a lot of certainty, a lot of stability because of the massive domestic economy.
You know, I heard you saying, Mr. Agrawal, that tariff is one of the things that is uncertain. And when we last spoke, uncertainty was the name of the game. We, when we spoke at our conclave, we were in the midst of the worst level of uncertainty. Has that eased? Even if we see worst case scenario on April 2nd, Trump does not roll back tariffs, have we seen the fear of tariffs ease? Now a sense prevailing that maybe there's more talk than action that will come?
No. I think one should not take it lightly. Let the April 2nd come. I hope April 2nd happens on April 2nd. There's no further delay. The markets are kind of getting ready for that. And on that day, see, it's not only about how much you charge on India. It's a global market. So how much you finally charge on China and other emerging markets. If you keep it at 20% for China and only 5-7% or 10% for India, I think China plus a strategy could get a completely new energy. So we have to see on April 2nd or whenever this tariff thing is settled, what comes out of it. So there will be some pluses, there will be some minuses, but I hope on the whole we'll not have to revise our earnings for the next year meaningfully.
Okay, let me come to the earnings question. We have now all come to the point that, all right, for quarter 4 is going to be a little weak. By the next 2 quarters, are we going to start seeing the pickup from FY27? Is that something that the markets will start discounting, is my point, where all of the impact of the action in the last 3-4 months starts showing effect, whether it's tax cuts in people's banks, whether it's capex spend, whether it's the overhang of an election cycle easing. Does that start now showing in the markets in the next 2 quarters? So when you say happy days are here again, how long do you see those happy days lasting is the short version of my question.
Yeah. So actually through the 2 days, today and tomorrow, I'm looking forward to meeting as many companies I can. At least I'll cover 12 to 15 companies from different industries, and we'll get sense of what's happening. Since the banks are banks are a starting point for every country. Any country you go, banks is a place where everybody converges. All the businesses, they do have to do banking. So if the banks are going to see pickup in their credit, it means that overall economy is going to do well. My GST collections are quite steady, growing at about 9, 10, 11%. So I think there is a lot of stability also. But I think credit flow to the industry and the overall economy, that has been kind of slightly slow in last 6 months or so. And RBI is doing everything to increase the liquidity in the system, and yet it is not done. So let's see how we go from here. And what is the mood in the corporate world? Now the fiscal benefit which have been given in this budget, that will start kicking in next 4-5 weeks, next month onwards, that will start flowing in. So what is the mood at the corporate level, that will come to know in this ideation conference.
What industries are you looking forward to speaking to or gauging the most from Mr. Agrawal? Whether you like the stock or no, or sector is separate. But what are you looking for the most?
Yeah. No, one is of course a few banks, financial services will go to. Second is that infrastructure companies, how things are happening, how they are getting the flow of their orders, flow of the execution, the payment cycles, or you don't know. Neeraj, you have to just go from one place to other for half an hour, 45 minutes, and quickly gauge the kind of mood of the company. So it is going to be a lot of fun going from one room to other room and catching up with them. So I remain completely open. I don't go with a preconceived notion or anything like that.
What is the Raamdeo Agrawal formula to quickly in a few minutes gauge what's going on? What are the 2-3 questions you ask? Give us your secret formula.
No secret formula. It's just how's the business, you just ask how's the business. And that's from there you start the very first question, you can see the management's eyes, and typically here better performing companies only come. All the companies which are on the sidelines, they would not accept the invitation or they will not come. So typically we get to see more performing companies than non-performing companies.
Okay, that's an excellent filter. If you show up, you have something to talk about. So that's a great start there. So then let's talk about some of the companies that are coming, and some of them we'll interview on the channel as well. Companies like Radico, Aadhar Housing Finance, some of them are really been in focus, and I know you wouldn't want to talk about it specifically, but do you think that most of the pain that we've been seeing over the last 2 quarters would be behind them in terms of consumption? I think appetite of consumers has been one big problem across sectors. Do you see that easing?
I have no idea, in the sense that actually what the companies they say, or what we saw in Q3, there's absolutely no sign of resurgence of the consumption. The commentaries were somewhat better, saying that rural demand is picking up, but I think urban was completely dull. So to some extent will get boost from I think I'm seeing that 2 things improving. One is the fiscal concession, but more than that, I think credit flow in the overall economy, that I think will start giving some energy. And government spending is, I believe, I met few companies, they said the government orders, the infra orders, I think from December itself it has started picking up big time. So at least from one angle, that is doing better. Let's see what's happening on the credit side and the general consumer demand, because inflation is also down and rate cuts are also coming in. I think rate cuts also do a lot of good to it. So a lot of things are coming to that. So that's what actually in toto reflects in the corporate mindset.
Got it. Mr. Agrawal, I believe from amongst pockets where you believe there is inherent growth for multiple years and this correction could be a good opportunity would be the capital market segment. Am I correct in gauging how you've thought about this pocket?
Yes, since I am from this segment, I can talk a little more about it. Because see, this is historical change we are going through, expansion of the market, expansion of number. I think this will be the most crowded equity market in the whole world, forever I would say. Not for 1 year or 2 year or decade. It is forever, it will be most crowded equity market in the world. So we'll have most crowded in terms of number of investors, most crowded probably in terms of number of companies listed, variety of companies listed, and a lot of funny things will happen here. Because if you are the big bazaar or big marketplace, a lot of things will happen, a lot of good things will happen, and a lot of new enterprises which would have not seen the light of the day will come into being, and that will give completely new impetus to the development of the country.
Okay. So and Mr. Agrawal, just one more follow up there, if you will. There is, I mean, the recent corrective move had brought a valuation of a lot of firms to a fairly sane level in the capital marketplace. Would you believe it's across the board that there might be opportunities? Asset managers, brokers, pipe companies, everything will benefit, you reckon? Because it's a tall statement that you make, the most crowded equity market in the world.
Yeah, so obviously everybody will benefit. The thing is that who have conceived a brilliant business plan, and who has that belief that and even then from the industry people also don't share the kind of optimism I have for the industry. So first those enterprises need to share that particular optimism and have a game plan. So the guys who have game plan and executing, those are the companies to chase.
Since we're speaking about the capital market space, and who better than you, Raamdeo, to give us a gauge of what the appetite is? Because we get, data from the mutual fund industry that was a little, not so heartening from last week. But in terms of appetite, have you seen that resurgence in the last 1 week or so? Are you seeing people cool off and becoming a little wary? What is the trend that you are spotting?
Yeah, so clearly the capital market activity level, clearly we have seen bottom in March. I would say it was weakest in the month of March. January was, I think December, January was the best. February was somewhat lower, of which we have the numbers. And March could be, I would think it will be lower than February. That's what my sense is. But things are picking up. After seeing the lows in the March, say, second week or something, we are seeing pick up in the third week and all. So that's the nature of the thing. As the market recovers, even the confidence in the mutual funds and private equity and PMS, everything goes up. The guys who are sitting on the fence, particularly the large guys, they start putting their cash into the market. So that's the process. When it is the best time to buy, there won't be anybody to buy. When it is the worst time to buy, there will be massive crowd in the market. So that's the very nature of the market. We have seen the low of the market for the year, I would say, in terms of action, and the recovery has started. Now, how rapid recovery will be, and will it again go back? Those are different things. Those are difficult things to figure out. But I think it's a nice market now.
So, from in that gauge of best time to buy and worst time to buy, where are we right now?
We are closer to the best time to buy.
Okay. And in terms of what you like, you already talked about financials. Are you liking NBFCs? Are you liking large private banks? Apart from financials, are you going to look at more capex, push, impact stocks? Just give us a sense of what Raamdeo is liking right now.
Yeah. No, I don't pick stocks because I don't buy directly. I buy only my own mutual funds. So these questions should be directed to the practitioners of day-to-day stock picking.
No,
I'm not doing that.
Yeah.
But I can broadly see. Yeah. So I can't talk about. First thing is, actually, I'm not on top of any of the stocks which I can say that here you should buy.
So let's leave stocks out of it. Let's leave stocks out of it.
Quick commerce.
Let's leave stocks out of it. In terms of what sectors, for example, is quick commerce still as hot? Is autos looking a little painful because you don't know if Tesla's coming in and what's happening? That kind of a sense.
Yeah. So no, not Tesla coming. This 5-minute charging. We saw the innovation last week, where BYD said that we can charge in 5 minutes car for 400, 500 kilometers. I think this is a game changer. This will bring adoption like at a very, very rapid pace. So I think if that is right and they can push it through, push it into the market in a large number, which China can do, I think in 10 years time you'll see the complete transformation of this industry. So I think we are looking at huge innovation, huge disruption also, and massive opportunity also, because there will be a lot of companies which are not to do with the per se engine technology or car. I mean, there will be winners and losers of this particular game. Winners will be the ones which can successfully adopt the technology and bring products incorporating them. And there will be a lot of say braking systems or the tire systems or a whole lot of part of the cars which have nothing to do with the EV technology or IC technology. I think you'll see some of these companies winning big on them. So it is very interesting space, and I would definitely like to meet some EV companies, some auto companies here and figure out what are they thinking about this particular innovation.
Yeah, and there are a clutch of them out here. I mean, there is hospitality, auto, recycling, and the like. Mr. Agrawal, one more question from my end.
Yeah.
You've looked at autos through so many decades, right? Hero, Eicher, Maruti, etc. If indeed this global EV giants come to India because of the duty changes, etc., does the Indian auto industry rise to the occasion, you think, or it's a case for disruption for the Indian automakers?
No, so far what we have seen is that new technology will be brought mainly by the existing companies only. I mean, at what pace they'll bring, that's a different thing, and who will bring faster, that's also a different thing. But we are not seeing any major four-wheeler company with only EV technology. You know, so some small companies are there, but nothing mega in size, and all the companies have launched their own EV products. So let's see who scales up, and so it's a hybrid kind of situation. Like in US and all, you have Tesla, which is only EV, that kind of thing, or BYD, which is only EV. Those kind of evolution has not happened in India so far.
What about IT? Are you liking IT at all? The IT trade, does it continue in your view, or too much uncertainty there with lack of clarity on what's happening in the US?
Yeah, globally the largest market share of market cap in the market, global market cap of 125 trillion is IT. IT is about 21%, and I think banks are about 17%. So clearly IT has its own place. And our IT is somewhat different from American IT at least. So they're not, ours is a services company, not a technology company. But there is some correlation out there. I mean, execution of a lot of cutting edge technology is also done by the services company. So see, right now it looks like a little threatened in terms of growth, but I think economics still remain on the side of Indian IT.
Got it. Okay. Mr. Agrawal, lovely talking to you, and all the best with the conference. I'm sure it'll be a riveting set of conversations. So, but thank you so much for sharing these insights with us.
Thank you. Come over here and speak to all these companies.
Yeah. We're planning to come to do that. We have a team there for talking to a bunch of companies. So thank you so much, Mr. Agrawal, for doing that, for talking to us today. And that's and it's an interesting set of companies, and it's a great time to talk to mid-caps, I reckon. So the timing of the conference for Motilal Oswal couldn't be better. I'm glad that we are covering key facets of this conference.
For me, the headline and the takeaways, happy days are here again. That coming from Raamdeo Agrawal is quite a stamp in itself. So what do you pick when happy days are here is really the question. And it's the time to buy, he says very clearly. So very key takeaways from this conversation. Thank you so much for joining us, and of course, stay tuned to NDTV Profits for much more.